Alright guys, welcome back. That was a old school video from back in the day. Just replace those bitcoins with gold coins and you you understand, right? Alright, so I've been busy with all kinds of things, life, and a lot's been going on in the private group, a lot of exciting developments. Besides the fact that, I mean, this is it. It's happening. It's happening, right? So all of the mining stocks are ripping higher. They've been ripping higher for weeks. First slowly, and then now they've reached velocity, or the plane just hit enough speed to get air underneath the wings, and it's starting to take off, right? So that's exciting for us in the private group. I mean we're killing it. If it all depends when you joined, but remember when I told you guys to take advantage of that March dip? If you waited until then and actually took advantage of it, you would be up massively, like multiples. Obviously everyone's returns vary. It varies from your experience and how much you leveraged up, and you know, seasoned investors and traders, they could really maximize gains when you're in a bull market. Like, for example, if you would have bought leveraged mining ETFs, threw some call options on there, yeah, I mean, you would have made 10x, 20x, like just crazy gains, especially with some of the leveraged mining ETFs. If you would have taken advantage of that March bottom, well, they print you money in your margin account. Like, every day you log in and there's just more money. It's kind of like having your own central bank. And then you take that, put on some more calls, buy some more mining stocks. That's what I did, and mining ETFs. And that's how you could really grow your entire account, like 10x it, 20x it, and you get that life-changing result. Obviously, it's not for everyone. Some people, you know, that's for more seasoned and experienced, advanced traders and investors. But for everyone else, I mean, there's a bunch of 5x, 10x mining stocks that have gone up that much. So the question is, are we going to see a pullback now? Because if we take a look at these, we'll just take a look at the mining ETFs. Where are they? So here's the ETFs. I mean, these, if we go back to March, here's the March low on, well, I don't want to tell you, I don't want to give away that one. That's a good one. There's a lot of good ones in here. Just want to make sure I'm not throwing away anything here for free for the freeloaders. I mean, this has been pretty massive. If you haven't been trading and in the financial markets for years, you don't understand. These types of rallies and these outperformed the broader market in the FANG stocks, the mining stocks, and the mining ETFs. They've outperformed everything else out there. So there's a lot of hype from mainstream media and from the noobs and the Robinhood traders and the retail investors. Because they keep piling into these tech giants. We've outperformed them by a decent amount, enough, right? So to say that we outperformed everyone, we did the best, and honestly, it's still the beginning. So the music's starting to play. My last video, I don't even know when I made my last video on YouTube. Maybe it was 2 weeks ago. I don't remember. I told you guys that window of opportunity is really closing, and it really was. So, and it's not, it's not too late. But you did miss out on, already, if you leveraged up and you really took advantage of that March bottom, you could have changed your life in the past couple months. Easily. So, it's good stuff. It really is. Alright, so let's talk about the broader markets. Because, something big is coming down the pipe here. Because look at this. The VIX has hit my magic blue line, my equilibrium line, on the daily. And I think it's bottomed out. It might stay down here for maybe a couple more weeks. I don't know. Because right now it's very, very difficult. Alright, before I get into all of this, first of all, this is not financial advice. Consult your licensed financial advisor before doing anything. I'm not a licensed financial advisor. Do your own research, this and that. These are my opinions. I could be completely wrong. There's no way I'm always right. Have stops in place, emotions out. Please do not invest anything or trade anything. Trade amount of money that you are not willing to lose or lose sleep over. It's all risky. It's all volatile. And I think it's going to get very volatile very soon. And that's why I'm talking about the VIX. The VIX is the volatility index. So, and you could trade that. We're 3 months out from the election. And I think the market's going to get volatile prior to it. Not just that, it's had a massive run-up, right? Unbelievable run-up. Q2 earnings, they're in play now. They're all horrible and everyone's ignoring them. Still, it's unbelievable. Economic data that's coming out today. So right now, what day is it? It's Thursday. It's 9 a.m. So 30 minutes before the open, and I'm going to make this video short. I sort of have to. We have economic data coming out on unemployment today. So that's something to watch. If that ticks up, the market's probably not going to like that. Because there's a lot of red lights and warning signals saying there's no justification for this V recovery rebound. Okay? And then there's, as Schiff has said, his last video was pretty good. The canary in the coal mine is metals going higher and higher. Oh man, yesterday there was a prior Fed chairman on CNBC, or one of the board members, and he was saying things like, everyone's worried about inflation, but they don't have to be, because that liquidity only goes into the banks and it doesn't go out into the broader market, and it's sort of stuck within the financial system, which is true, but the inflation is stocks going up. That's where the inflation's really going. That's why the rich are getting richer, and that's how it is. But this next stimulus package, which might get delayed till the last minute, which is going to cause the market to get a little jittery as well. And there's political uh, strategies involved as well. They might want to not have it go through or wait till the last minute. Well, anyways, it's going to be a bigger package. Some more cash and liquidity is going to flood Main Street. Your retail, your average Joe six pack, apparently they're just spending money, and they just lost their jobs because they're actually making more money. You know what's weird? I was just driving around this morning. There's a lot of cars in the driveway. New cars, by the way, in their driveways. And it's Thursday morning. People aren't going to work. The unemployment, I talked about that in my last couple videos. It's unbelievable. It's Great Depression levels, if not worse. It's actually probably worse. What's his name from Shadow Stats? He had a great video. I posted that in the newsroom like maybe last week. The real economy is really screwed. I mean, it's bad. You just don't see it yet. It's going to take a year or two. But, as of right now, I mean, there really isn't massive... you don't really see it and it doesn't really feel like it, because of the stimulus and the like the welfare checks plus extra. It keeps everyone from going out in the streets, right? And things seem fine for now in the US, at least. I don't know about the rest of the world. And you know what, let me just go on a little tangent here. The state did this to the economy, right? Like, this wasn't by chance. They didn't have to do all this. You could have just let it run its course. More people, I think, are going to be victims, or not be victims, will lose their lives, right? In the long run, because of the massive poverty that's coming. Because of the shutdowns. Like, listen, the bubble was going to pop. The economy was going to go in recession anyways. But it wasn't going to... But they literally put out more than half of the small businesses in the US and all around the world. The ramifications long term of this will be such severe poverty that way more people are going to lose their lives, in my opinion. That's my opinion. That's what I believe. And yeah, I think there's an agenda because, it kind of goes along with everything, right? Because now the big corporations, the big box stores, the big corporations, I mean, they were allowed to stay open, and now they take up more market share, and that's how concentration of wealth and power now is consolidating even more, and they're getting the sheep dependent on the teat, on the farmers. Now the sheep are way more dependent on the farmers than ever before, and that gets the sheep. That's how they get the sheep to do what they want them to do. Because if you're dependent on them, because you can't find a job because they're all gone because they destroyed them. All right, but I don't have too much time. So look at the 10-year yield. It's hit rock bottom. This is the lowest, like, almost ever. It hit a little bit lower back in like April. But it's below the 0.60 on the 10-year yield. Let's take a look at that. No one's looked at the yield curve in a long time. So I'm going to do that. Now, a lot of people probably aren't looking at it because, central banks are pretty much, they're going to cap yields. And what this does long term, the unintended consequences of their market manipulation, essentially, is that no one's going to trade bonds anymore because there's no point. There's no price discovery. See, that's the part of capitalism and free markets and trading and speculation, all this. Low IQ people and indoctrinated people don't understand the purpose of the stock market and speculators, traders, and investors. What I do, is I take money and I allocate it places where it should be. And I take it from individuals and fools who allocate money places where it shouldn't be. For example, a lot of fools going into Tesla. The money should not be there. It's a waste of, there's opportunity cost. So all the money that's flooding into Tesla isn't flooding into other companies that could change the world and make it a better place. Who have real technology, who may make a better car. Or a hovercraft, or flying cars. I don't know, whatever, right? So that's the purpose of the speculator and investor. They move capital. They get rid of the misallocation. The problem is we have central planners who, because of their constituents and donors and the people who own them, the banks, and the state, they manipulate the markets, and then you get misallocation all across the entire economy. People don't have jobs now. They kill small businesses, and money goes into the pockets of the corrupt, and you get poor, right? And that's what the lefties don't understand. If they just understood this, that this isn't free market that's doing this, it's actually already socialism and centralization, right? That's doing all this, then we could actually live in a very amazing world. Problem is, we've had the good times for too long, so now there's a bunch of soft people. Men aren't men anymore, and because of that, we just got a lot of parasites. So, anyways, I digress. Let's take a look at the yield curve. All right. So here's the historical 10-year Treasury yield versus S&P 500 PE. I don't want to get into it. Just understand this. The black line is the S&P 500 PE. The 10-year maturity rate, right? So let's take a look at this chart. Now, the gray in the background is every recession, right? When the economy turns down. So what happens? What's the trend here? Well, ignore the blue line, that's the S&P 500. Let's just take a look at the black line, the 1-year constant maturity rate, and then the green line, the 10-year constant maturity rate. And then this line is the difference, okay? Well, before every recession, the black and green line, the yield on the 1 and the 10-year, they go up. And then they crash. And then you get the gray area, right? Which is a recession. Now, if we take a look over here, right before every recession, right before it'll fall, and then it'll start rising, the yields, and then they will spike, and they'll cause the recession. Well, we just, they just fell some more. We're at historic lows, but now it's starting. I mean, the only way it could possibly ever go back is up. Now, one would argue that the central planners will somehow cap it and just keep it down there forever. Maybe they can, but that doesn't mean that the system won't blow up. Because what it means is there's no incentive for anyone to buy bonds. Who's going to buy bonds? Corporate and government. Who's going to buy them? There's no point. They yield nothing. And inflation is eventually going to run higher. So there's no point. So where are people going to run? Maybe stocks for a little bit. I mean, sort of. It's what's been happening now. And that'll create a stock market bubble, right? Well, we already are in a bubble, but a hyper bubble. And that's what happened with some countries that started seeing massive stagflation, inflation, eventually hyperinflation. Like Venezuela's stock market did great, did amazing in the beginning phases of the stagflation because there's nowhere to run and hide besides the stock market, stocks, and maybe and metals. Metals is the place to hide. That's where you're gonna actually save your wealth and increase it massively, especially if you have mining shares. Because the physical metal, that's insurance. That's not gonna make you rich. I mean, you'll probably see a couple multiples of your wealth, but all in the end, if you actually want to increase it, not just save it, it's the mining stocks. But what else was I gonna say? So these corporations, you know what's gonna happen? This is what's gonna happen. Believe it or not, earnings and revenue may not look all that bad in the next coming years because inflation is gonna start running higher. So it distorts the balance sheet. It distorts the revenue because it looks like the company's making more money, but it's not. It's just that their prices are going up. Now, that will be short term, and short term could be 2 years, 3 years, 1 year, 5 years, and it'll sort of keep these zombie corporations alive, and so will extra QE and stimulus, and they're going to try MMT, so people are going to have money. But eventually the inflation will become so bad that people will stop buying things because it's going to get too expensive, especially discretionary spending on things you don't really need, like more like luxury items, this and that. People would have to just focus on the basics, just as, maintain life, like food and utilities and gas, stuff like that. So I'm pretty much done talking about that for now. Let's talk about a little more about the markets. All right. Let's talk about the dollar. This is pretty interesting. So it broke down out of its range. I did not think they would let it break down out of its range, but that sort of shows you that this is not just the US, but globally people are really starting to question the dollar hegemony because, I mean, they see the election coming up and they see that possibly, well, one, the Fed, they already said they're not going to raise rates for years. Essentially, they'll never raise them because they can't. Or if they do, I mean, we'll just everything. These big corporations and banks go under then. And what would happen? And they're not going to do that because that's the hard way out. That's the very painful and hard way out. It's the right thing to do for the long term, but they're not going to do that because it's, for one, the politicians. They'd rather sneakily, like, they're very sneaky, right? So they would rather tax you with inflation, not directly, and then cut spending. And then these corporations and banks, everyone just suffer. They're all going to go under, these big corporations that are really overvalued. And all of the debtors, right? So most people are just swamped in debt, like an average American. A lot of people in Europe as well, and all around the world. Everyone's just. Will there be a debt jubilee? Maybe, sorta, but I think what the debt jubilee is going to be, they're just going to keep printing, so then the debt becomes less valuable because the currency is less valuable because currency is debt. All right. The dollar's breaking down. It broke below the 95 handle, 96 handle. This is it. It's not super weak or anything. It's just it's broken down a decent amount now. So there is some support right here. Let's put it in. And it's not bouncing or anything. It's just sitting here. But I still think we're going to get possibly a little bounce, some sort of bounce. Why? Because I still think the market's going to correct. Now, I've been saying that for a while now, about a month, and I've been wrong. Well, like I said, I can't always be right. So maybe a correction in the markets 3 months out from the election. Q2 earnings bad. Q3 will probably be worse because they're doing relocking down some stuff. Depends what state you're in. So, and as time goes on, the economic data is really just getting worse. So, the market could ignore it, I guess, but not forever. Not just that, I mean, if you look at the Nasdaq and the FANG index, it's parabolic. We'll look at that in a second. So the dollar will probably catch a bid when the market corrects, because that's what everyone does. It's a knee-jerk reaction. So I think it found a little bit of support here, and it'll probably get a little bounce. Give it a minute to load. Market opens in 5 minutes. Let's take a look at, real quick, the futures. So this morning when I woke up, gold was above $18.80. Silver was above $23 an ounce. And the Dow, the S&P, Nasdaq, all of them were in the green. But now they've sold off since, prior to the open. And we've seen that, right? Like overnight, the market just goes up, and then during the day, during the US hours, the market sort of trades sideways, sometimes up. For some reason, TradingView keeps messing with my charts. Like, it just takes away all of everything. Well, here's the FANG index. Let me show you just a monthly chart. Like, we could zoom out. How parabolic it's gone. It's not... There's no fundamentals, nothing... And, all they talk about on mainstream is, well, these are the safe haven stocks now because everyone's home. So they're going to go online and use these tech companies. Yeah, it's true, but still doesn't. I mean, these valuations are still just out of P ratios of over 35. That's like insane. And in the newsroom, I was posting how silver might get a short squeeze. And I think we did get a little bit of a short squeeze, but they're really trying to cap this thing from going higher because, I mean, right now it really should just keep rallying. I'll talk about it in a second. Let's, so here's the FANG index on the left, daily chart. Look at this, from the March low, all the way from 2,400 to 5,000 on the NYSE FANG index. Insane. If you bought that dip, you did really well. I got out around 3,000, 500. I didn't think this was going to happen. This is nuts. And these are retail investors pushing up the price. All they do is buy with their extra stimulus checks, and who knows. Here's the Nasdaq composite monthly. This was the dot-com bubble back in 1999, 2000, 2001. This is where it is right now. Here, let me... This is insane. Look at this. Nasdaq bubble right now. This is starting, if the Nasdaq falls to 9,450, this will be a blow off top, and the only way it's going to go is back down. at least revisit something like 6,900, 7,000, so maybe even 6,000. That would make sense. But can it just keep rallying higher and higher? By the way, Yellen was calling for the Fed to buy stocks. Can it go higher? I think we're going to see a pullback and correction soon. W recovery, W. And I've said that, and now other people are starting to say that. So here's... Now every indice is going to look a little different. I'm just drawing on the Nasdaq because I have it up. Something like this, right? Orange man gets elected. And then... Or wait, you know what? That's wrong. Let me zoom in. This W will look different because the Nasdaq hit all-time highs, the S&P and Dow did not. So that's the one part of the W. Here's the middle part. And then boom. And then something like that. And then it either rolls over, crash, or just rips higher because we have massive inflation, and that's what markets tend to do. Does that make sense, guys? And this plays out for the next 4 years, something like that. So I'm not calling for some sort of... A market correction is not a market crash. Although it might feel like a crash because it's going to fall a lot. Because it's gone up so much, you know. Although, looking at my candles and my indicators, we have a 3 count to the upside on the monthly. So, 2 months of pullback, and then higher. Maybe. I don't know. I don't know, guys. We got to take this day to day because the manipulation's so bad. Alright, what else we have? Well, the market opened. Gold's still green. That's good. Alright, here's an important chart. The euro and the dollar. Now listen, there's a lot of people from Europe who listen to me. When we talk about metals, like, you need to look at metals in your own currency. So whatever currency you get paid in, wages-wise, that's the price you should be looking at, not the dollar. Because the euro has been losing value against silver and gold way more than the dollar. Or if you live in South America, those currencies have lost way more value versus silver and gold. That's why a lot of people in the private group are foreigners, because they've already felt the inflation. U.S. citizens, not so much. So keep that in mind. That's important. A lot of people don't mention. Looks like the euro is breaking out versus the dollar. But Europe just printed like 800 billion. 800 billion doesn't sound like a lot because the US does trillions, but because the euro isn't in as much, it's not used as much in the global market. It's only used in Europe. It's a lot less liquid. So when they print like 800 billion, that's like the equivalent of the US Fed printing like, I don't know, like 3 trillion or something. Who knows? So technically the euro should be falling against the dollar now. It topped out. This is the euro versus the dollar. These candles you're looking at here. So I'm expecting the euro against the dollar to fall back into this range. And here's a theory of mine. I feel like these central banks, they like take turns globally with the printing presses. So no single currency gets hit with serious inflation all at once. So their people don't wake up to the fact that what's happening. All right. That's a good, I think that's a good theory. I've never heard anyone else say anything like that. It's my personal theory. Watch, one of the big YouTubers will actually say that. Because some of them listen to me. Not many, but I think a few do. Relatively, I'm a nobody, and I like that. I really don't want to be huge. I should be huge, but we all know why I'm not. I opened my mouth. They don't like me, so they won't let my channel grow. I should have like 100,000 followers by now. Here's Platinum. Platinum had a nice bottom here. I think the only way it's going to go is up. Now, this is more long-term. It's not going to have as much upside as gold and silver because those are monetary metals. But in Asia, I believe they really like platinum. And I think there's a lot of upside to it because, I mean, look at this. It's in a bear market still. It hasn't broken out. Gold and silver are definitely not in a bear market anymore. They're in a bull market now. So they're in the beginning phases of bull market. But platinum hasn't even started its bull market. Once it breaks above like $1,000, maybe we'll start seeing more rap videos with grills. I don't know. But there's some opportunities there. There's some stocks for a long-term hold that pays off in the long run. Tesla, here's Tesla. Let's just look at it for a second. Weekly charts on a 6 count. So these go up 9 counts at a time. So 7, 8, 9. 3 more weeks possible upside. Oh yeah, and they're possibly going to get approved to be on the, whatchamacallit, exchange. I think it's the NYSE. No, it's the S&P 500. Which is really bad for the U.S. markets long term. Because this company's not worth anything what it's capitalized at right now. Its market cap's like $300 billion. That's insane. It's like really worth like maybe $1 billion or less. I don't know. But in my opinion, okay. And they have so much competition. Their subsidies are running out. All these other real car manufacturers. Now there's speculation because Elon could go buy GM or something at this point. I mean, Tesla is priced. It's worth more market cap wise than Ford, GM, Chrysler, like BMW, Volkswagen, all of them combined, which is insane. They don't sell anything remotely as many cars. They don't even make a profit, guys. This is the insane world we live in. And this is what central planning has done. It's caused a misallocation. Now, I'm not telling you to go short this thing because it's very dangerous and it'll cost you so much money to short this. If you put on a put, I mean, it'll cost you so much money. And I can't, like, I'm not even shorting this because it's too much. It costs too much. I mean, maybe that. Listen, I'm not telling you to do that because who knows, guys? Who knows? This thing could hit $2,000. I don't know because there's no rationality behind it. These people just they think it's going to the moon, so it might go to the moon real quick, and the bubble will eventually burst. All right. I wouldn't do anything until I see a huge shooting star, maybe. But who knows where the price will be when that happens, all right? And if they do get listed on the S&P 500, maybe it's buy the rumor, sell the fact. We'll see. It's just something to watch. I'm not doing anything with it. It's too risky in my opinion. All right. Here's the VIX. It's bottomed out in my opinion. So that means we're going to see some volatility soon, meaning the market's probably going to correct. It might start actually this morning today. It is Thursday, so maybe sooner than Friday, and people are going to try to get out before this weekend. I've placed hedges, and I'm thinking about getting out of my leveraged mining ETFs actually right now, so I need to finish up this video so I can post it for the private group, and then eventually when I have time later today, it'll go up on the YouTube. I've already put on my hedges. These are my hedges for my entire account. I do not sell most of my mining stocks. I just sell the ones that I trade. Basically, I trade the ETFs. Okay. Now, will gold... And, okay, so I do hedge with, with shorting. So that's QQQ. It's an inverse ETF to the QQQ, which is I'm shorting the Nasdaq, right? So that's how I hedge my portfolio and take advantage, and I might even make a lot as the market corrects and pulls back, right? And I use options, but you don't have to if you're not experienced. You could just outright buy the SQQ, right? Only do options if you've been trading for 7 years and maybe like 5 years options, and you've been profitable for many years now. Know what you're doing. If you don't, you could lose all your money and even go negative in your account. And I'm gonna make tutorials. Oil, it's been steadily going up, slowly. I bought in months ago when it was like negative, and I'm holding till the fourth quarter. But it tends to drop. It might drop a little bit for next month or something because the economy looks weak. Why do I keep... All right, let's take a look at silver. So I'm disappointed. I mean, look at this. This is a short squeeze. If the market starts correcting really hard and fast, that's what I'm worried about. It'll maybe put a stop to they're going to take advantage of it, the bankers. They're going to smash metals. They're going to smash silver back down a little bit. I don't think it's going back below $20. And I don't think gold could go below... It could go maybe down to like 1750 at the worst, but it'll rebound very quickly. Because if the market starts correcting, guess what? They're going to come out with more... Powell's going to come out, right? And they're going to do more QE. Because they can't risk the market correcting too far down because they can't reinflate the bubble if it falls again. But look at this. This is beautiful. The silver mining stocks, man, they go up. Like some of the small ones, hundreds of %. I just hold those. I bought a bunch, right? I accumulated a bunch of shares, even in the small caps, this and that. And I just hold them long term. 3 years or something, I'll sell them. When I think the top's in, I don't trade them. Here's gold on the left, silver on the right. Daily chart, daily chart. Oh no, that's a monthly chart on the gold on the left. So let's just take a look at gold. Silver is, shit, looks like it's starting to get... Is it getting slammed right now? It just fell from 2370 and it's at 2276 right now. It's not that big of a deal. It's a buck. I gotta get this to the private group. Look at this. This is beautiful. The monthly is on a 7 count. What that's telling me is there's 2 more months of upside for gold. Let's take a look at the oscillators. I mean, it's the RSI, momentum oscillator, all of them are pretty pegged to overbought. But, these are extraordinary times. And a lot of people, the FOMO buying's starting now on gold and silver. Especially since silver broke out, now it got people's attention. And there's shortages. Silver's like selling for like $37, 34, 35 on the real market. So the futures price is catching up to it. The funny thing is we might get a huge short squeeze because the open interest on it is enormous still. And that's what I'm hoping for. So a huge spike to like $30 on silver real quick in like a few days would be amazing. And then I'm going to take some profits on my leveraged ETFs because I put a bunch of call options on them. The private group members know what I'm talking about. And it's been doing great. So yeah, gold's on a 7 count, which is great. Let's take a look at the weekly. It's easier to chart gold than silver. That's what I'm trying to tell you guys. And silver might lead gold higher. That's what it usually actually does in a bull market because the ratio gets out of whack, the gold-silver ratio. And then as it closes that ratio, silver leads gold higher. All right, the weekly's on a 6 count. That's great. It's good stuff, right? So we have 7, 8, 9. So 3 more possible weeks of upside on gold. Oscillator, it's up there, but still some more room to run. Let's take a look at the 3-day. So the 3-day does not look good. We look like on the 3-day chart, we have a sell signal. So we might get, maybe a week of downside, 2 weeks of downside, something like that coming up, like probably now or by the end of this week, especially if the market pulls back. Oscillator super overbought. Let's go to the daily. If it will load, come on. It's frozen. Give me a second. What else should I talk about? Am I forgetting anything? I always forget something. In all my videos, I need to start making notes again, and then, because when I take notes and I prepare for like an hour or 2 hours prior to a video, this time I didn't, I make very good videos compared to just me, freeballing this one. And yeah, I have shorts on that. All right. All right, let's try to get this to the daily real quick. I gotta go though. The market's been open for like 15 minutes. Come on. I have like 100 tabs open. Weekly. Yeah, look how far the candle and the price is from the 200-day moving average. So we might get a dip, a pullback here. I mean, the daily's only on a 4 count, but the 4 and the 5 counts tend to be tiny dips. But it's also aligned with the 3-day chart that's on a 9 sell signal. So that's sort of telling me for the short term, gold might like pull back at least to I mean, there's support at 1755, 1760, like I said. So I gotta go. I think I'm gonna just get out of my leveraged ETF mining ETFs for now. All right, guys, smash some likes, share the video, leave a comment. I'll get to it in a couple days or something. Until next time.